Welcome to the second release. It's been roughly a month since the first one, so I guess I'm releasing these on a monthly basis. But let's get straight into this second release, and I'm going to start with a quote that I think highlights the harsh realities of investing in the public markets. It's a quote I came across a few weeks ago. And the quote goes, "Welcome to the hardest game in the world. Unfortunately, you're playing with some of the sharpest, fastest, most intelligent, well-informed, stubbornly irrational, and in many cases, unethical minds in the world. You're up against a computer that can react faster than you, the trader who has more experience than you, the fund that has more money than you, the insider that has more information than you, the others that will misinform you, the inner voice that will do its best to undo you. So leave all your dreams of making quick and easy money behind. The first aim is survival. Your absolute first goal is to learn how to stay in the game. You can only do this by mapping the territory, by understanding how the enemy thinks and acts, by having a solid game plan." Now that, I think, encapsulates the harsh realities of investing in the public markets. Reflecting back on how I encountered the public markets, and I dealt with that in depth in the first release, and that's really an introduction video. So I would urge anyone who is questioning, who is this individual? And why is he speaking about investing and trading, and why should I listen to him? I would encourage you to look at that first video if you want some additional context. But most of the stories that I would have initially encountered and came across were actually stories where capital was lost, right? Those early stories, for example, there was one, I'm not going to go into any specifics or release any names, but it was a family friend, and it was a mutual fund investment by that family friend that got hammered by the 2008-2009 implications of the global financial crisis, and that led, I think, to about a 40% loss in the invested capital. I can also remember my days in England when many of my friends, they were very fixated on the latest coin, the latest stock, and they were trading on these retail trading platforms, which of course many individuals are. I have also traded, so I understand these platforms, and I'm not saying that you should not trade on these platforms, but as we will tell as we go forward now, what happened was many of them lost their capital. Many of them were in the red by a multiple because of leverage. So the risk of losing your capital can be high, can be very high, depending on your approach. So why do you take this risk? Why do you engage in the public markets when it comes to investing? Why do you look at stocks? Why do you look at, let's say, retail trading? Why are you interested in those things? And the answer is quite simply the expected return. You're expecting that you're going to receive a much higher return than simply either keeping your money in a bank account or under your mattress, as many people like to say in a funny way. But it's very simple, it's the expected return. If you do it right, the expected return. And I'm reading currently The Guerrilla Game, and this is a book written by a few authors, but one of the authors is Paul Johnson. Paul Johnson, I had the pleasure to meet physically in Manhattan recently at an event, and I had the pleasure as well of him teaching me. So I am reading one of his books, The Guerrilla Game, and on the jacket of the book, I think I would like to just draw your attention to that, and that encapsulates this expected return very nicely. Let me reach for this book. Camera tracking is on point. Right, so it says the possibilities are staggering. It says, had you invested, now mind you, this book came out 1997, 1998. So when I'm quoting how much you could have made, that's based on that timeline. So had you invested 10,000 in Cisco systems back in early 1990, your investment would now be worth 1.285 million US. Similarly, a 10,000 investment made in Microsoft in 1986 would be valued at more than 1,800,000 today. And again, that's in US dollars. That would have been in 1997, 1998. But that shows you what you can achieve if you do things correctly and approach in a mindful manner. And the mindful manner is this one in which we're going to get in depth with. So, yes, the risks are high, but the expected return, if you mitigate those risks, if you follow the correct process. What is the correct process? That is subjective, and that will be based on you. So we are all seekers of this greater return for our money than simply earning on a bank deposit. We're all constrained at varying levels with our money, and we're seeking to create wealth for ourselves, and we're seeking to create wealth for our families. What is harsher than the realities of the public markets is the reality of our institution, the reality of our societal solutions. Now, this is not a series in which we get into those, but I'm speaking about that from a global perspective before my comments are taken out of context as a global observation. What I'm really getting at is that the weights attached to institutional trust and the weights attached to self-reliance has shifted greatly in the past decades towards self-reliance. And we have had the rise of retail investors. Now, I've spoken in the last episode that I take an institutional approach, but I'm also very aware of this retail trading movement and providing content for this retail trading crowd, which is why I have this platform, which is why I'm doing this series. And it's one that cannot be denied, right? And it's on the back of globalization, it's on the back of financialization, and access to securities across borders. Now, when I go into speaking about investing and defining these various aspects, I'm speaking from a global perspective. As I said, I'm focused on global securities, specifically energy, so global energy securities. And that is the background from which I will speak. And what we have seen with retail trading and the retail trading movement, access is going to continue to increase, and the pace is uneven. So you may be in a jurisdiction where it has not yet taken hold to the extent that it has in other countries. Certainly, if you look to South Korea, retail traders in South Korea are actually called ants because of the power of their collective action, and that's something that is wider than investing, power of the collective action, right? And again, we're not getting into anything political here. We're strictly dealing with investing and taking things from a practical standpoint of actionable market intelligence, right? In South Korea, for example, retail investors account for about 60% of the annual transactions in the Korean stock market. Markets. These investors are now more focused on the local stocks after an emphasis on US stocks. Well, you may say, Alex, I live in a jurisdiction where there is a lag, in retail investing, where there's a lag in retail trading. Alex, I live in a jurisdiction where the stock market is in need of advancement. I live in a jurisdiction where the local stocks do not attract me, and the upside and the ease of investing in international securities is not there for me. I'm not attracted by it. And I'll say that you need to be aware and you need to prepare yourself for all avenues in which you could deploy your capital in a manner that is along the lines of your risk-return framework. So it may not be today, it may be you're preparing for a wave to come, and this is certainly the case in many countries to which this video may reach. Certainly the case in Guyana, where you really, this is a future method to deploy your capital. I do think a lot of development has to occur. I do think it will occur because of the ongoing wealth transformation, because of this new generation. And I think it's only inevitable. I do believe, for example, there is a lot of potential to be tapped, even from the perspective of, yes, there is local content legislation. You know, I have a government background. And that is, let's say, one avenue that is going to create a lot of thriving Guyanese businesses. And should those businesses have the ability to raise capital from an exchange, we have one exchange. There is no limit to one exchange. Maybe we will have more than one exchange in the future. But let's say that those companies can attract capital on one of those exchanges in the future. And as an ordinary Guyanese, you and I could get a stake, get a claim in the transformative process that is currently occurring in Guyana. We get a stake and we get a claim in a very profitable business. And that is one way in which an ordinary person can feel the development that is currently unfolding. And I do think that this is an area that will receive lots of attention. I do hope that it does. I do hope that all of the various mechanisms to ensure that the ordinary individual feels the impact of the wealth transformation, that is going to allow you to have more capital to allocate. And in the future, you may have as a feasible route to allocate that capital via retail investing. So we are learning skills that will inform the decades to come. And it is therefore worthwhile to invest your time and to learn this particular arena. At the end of the day, your capital lives and dies based on your decisions. And there is warfare in investing and trading. And experienced persons, many that I've encountered have used the term war stories when reflecting on their days. And if you run onto the battlefield without a strategy, chances are you will get mowed down. If you survive based on pure luck, you will inevitably be faced with defeat. So it's something for you to consider. Connected to this high risk of you losing your capital is the fear of missing out, FOMO. And there are many good videos on the fear of missing out online. There's also a TED Talk. So you could find more information online on the fear of missing out. It's important for you to really master your mind before you can master the market, for you to have a frame around your investing and your trading. So the question is, why are you investing? Why are you investing now? Those are some of the questions to ask yourself. Why are you investing in securities? For example, why are you retail trading? The why is for you to determine, for you to personally justify. And your victory, your pursuit will be a nested concept. There will be victories within victories. Take your time to define your process. And remember, you could win the battle but lose the war. All right, you have King Pyrrhus of Epirus, who after winning a great battle against, I believe it was a Roman force, he was receiving praises from one of his generals. And he said, if we are victorious in one more battle with the Romans, we shall be utterly ruined. Right? So, at an institutional level, a common question by potential investors that I will have to be ready to answer is walk me through your process. So know thyself, know your why, and know your process. So are you a generalist or are you a specialist? And there is no issue with being either. What guides your daily interactions with the market, such as risk return, for example? How do you screen your universe of opportunities? The universe of opportunities may be very wide. How do you narrow that down? Right? Are you following, for example, teams? Have a well-researched approach and reasoned decision. And all of the simulation sessions that I've taken, whether it is crude oil, trading, whether it's natural gas and energy trading, and these are really focused at an institutional level. When you have your performance review, it's not about you having a losing trade. You're not going to have all winning trades. It's about you having an understanding, having a justification as to, okay, this is why I made this trade. These are the market conditions as I saw them, and I am able to justify why I made that decision. Having your reasoning around the process is very important. Be aware that you won't have all winning trades. It does not work like that, right? For example, I would say at an institutional level, right? We have you have portfolio managers. You can have an investment committee. So at your level with retail investing and retail trading, you need to create your own investment thesis. Spend the time to do that. And these are concepts. If there's songs, I'm saying them at a superficial level now. I'll get into some of these concepts that I touched and get into the detail in the next release, right? But you need to take the time, create your own investment thesis, scrutinize your own analysis, and you need to know when to kill your own idea. You don't have that PM, you don't have that investment committee to say this investment thesis that you have presented is no good. It may be no good at the time, but we may want to monitor it, or it may just be not a good idea. So you need to be judge, jury, and execution of your own process. Right, I'm looking at the runtime. I don't want these to be lengthy videos. So I'm going to end this video, and this is what I'm going to do in the next release. So in the next release, what I'm going to get into detail now, we're getting into the meat, getting into the substance, is that we're going to learn more about the process that you should form around your investing. And for me, for example, I'll walk you through what I use, my process, and what I'll take you essentially from is because I'm assuming that some of you may currently be engaged in retail investing and retail trading. But for the large majority of individuals, you could use this particular series to really start to cement your interest in this area. So I will approach it from that perspective because I think if you take an industry approach, so if you take it from a top-down approach, it is one that is highly relatable. So for example, you may be looking at this and you're a pilot, you're interested in aviation, so I would say gravitate towards, maybe because you have some understanding as well of the business, look at various airline stocks, right? That is one way of getting interested, getting deeper into retail investing and retail trading. Let's say, for example, you're a doctor, right? And you're interested in medical care, and you take the point of view of, okay, healthcare companies, you look at healthcare companies. You know, finance is a game where we don't have the emotion. So even to the point of view as, let's say, for some reason you're fascinated with debt, you can find publicly listed securities associated with that from the business perspective, right? And I was having this conversation recently in terms of how we break down such a company involved in funeral services, for example, and you just having a very analytical approach. So I would say that that's a relatable way of looking at it. What are you currently doing full time? If you're doing this as a hobby or you're doing this as something that you're very serious about, you try to find the areas that you think you can have a competitive advantage in trading and investing. And for me, I have an energy background, so I look at energy securities. I don't only look at stocks. I have a very strong background in futures, but I also look at other derivatives. And you can get that from the first video if you want to know more about me. I would advise you, if you're going to ask me a question, ask me on LinkedIn. Get to my profile on LinkedIn, send me a message. I'm going to respond. I'm very bad at looking at the messages here because this is a managed page. So I would say get me on LinkedIn. And we're going to walk through how should you go about your retail investing, retail trading journey, the process around that, and you're going to get to learn about, okay, what is this investment thesis? It may be surprising to you, but for our buy side, those are focused on the buy side. Investment thesis is a very core aspect of the buy side. So all of that in the next release, in the next episode to come. So see you there.